Yes, we did. We did. That's another way to think about it. We did. We did.
Where does it come from? Do you just print it?
We printed digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial turmoil explained.
Good morning, ladies and gentlemen, and welcome to the show on this September 20th, 2022, a Tuesday. Thank you for tuning in. Biggest mistake ever. You know, this is wartime right now. Russia's at war with Ukraine. You know, they call it a special military operation, but this is wartime for the United States because there's a economic war actually going on with China that never was stopped. They called several truces there, but it's still ongoing. And the biggest mistakes ever being made is the mistakes that the Fed is doing right now. Now, we're going to take a look at an article right here. The EU is seeking sweeping new crisis powers to secure critical supply chains. Now, what I heard about the European Union right now is that they are on a downward slide financially in the financial system in Europe. That the standard of living in Europe is sliding off a cliff in all of the European Union right now. And so the European Union right now they're detailing the plan calling for a single market emergency instrument. They'll be granted the power to declare an emergency and trigger a wide range of market interventions. The draft measure comes in response to what the European Commission said were structural shortcomings in the way the EU single market operates, and were exposed. These were exposed by the COVID-19 pandemic, and it is hampering the European Union's ability to respond effectively to crises. It says we need new tools that allow us to react fast and collectively. COVID-19 crisis made it clear that we must make our single market operations at all times, including in times of crisis. We must make it stronger. This is what they've said. They said they must be better prepared, so they're putting in this mechanism. Now, expect this over here in the United States, Canada, Mexico, and so on, emergency measures to be put in place too at a certain time and place. Probably some sort of emergency crisis management, because that's what we're headed toward. And the Fed, in fact, is triggering it. You know, Russia and China over there, just sitting over there. You know, I'm just thinking to myself, hey, you know, if they were to just watch and see what's happening to the West, how the Fed is doing more damage to our system over here. And they could actually, if they freeze the system, they could do damage where it could actually inhibit our war machine. Russia and China's just sitting over there, and they're watching and waiting while we are self-destructing. And why are we self-destructing? Because the Fed is making the biggest policy error they've ever made in their life by this trying to fight inflation. We had I'm not going to say it was a vibrant economy, but we had an economy. They're going to completely and utterly destroy us and put us into something that resembles the Great Depression of 1929 era, 1930s. And, you know, if that gets too bad, if businesses and stuff, if we can't take care of our own business, how are we going to fight abroad? That means that China would be having their eyes looking directly at Taiwan and thinking, hey, that's ours. We want that. And Russia is thinking about Europe. And these are two huge military powers. We can't afford weakness when we have these two huge military powers that are working together to basically, they're going to take whatever they can get. I mean, if you give it to them, I mean, they're sitting over there, and Russia's got their eye on Berlin. If you give it to them, if you just say, here, take it, because we can't handle our own business properly, you know. And what about China? You think that they would even stop after they take Taiwan? If you give it to them. If you just say, okay, we're going to self-destruct over here, and we're not even going to have the money to bring our military home, because we've got a Ponzi scheme that we've been running since 1914 until now, and now we're gonna pull the moorings out from underneath that Ponzi scheme and let our entire economy completely and utterly collapse, and we won't even be able to feed ourselves? Come on. What can I say? Well, let's get in there and take a look at the markets today. Take a look at the silver price today. You know, I mean, it's starting to bounce back a little bit now, but you know, it's down 38 cents. It's at 19.16. Now, I'm going to tell you guys what. We're having difficulty with the silver and gold price because the markets are rolling over somewhat. Bond yields are rising. This is triggering the markets. What we're looking at is inversions all over the yield curve as far as bonds are concerned. This is all being caused by the Fed and their restrictive monetary policies. That's really going nowhere. It's not going to destroy inflation. Inflation is a monetary phenomenon that is almost like a flywheel. Okay, you know, I mean, okay, you got to say a lawnmower, you know, and one of these old pull start lawnmowers. What you're doing when you pull on that cord is you're spinning the engine over. Well, once it starts to gain ignition, and once it starts to gain that, there's an actual flywheel in there. That big cutting blade down beneath the lawnmower is it acts like a flywheel. And once it gains momentum, then it's awfully hard to stop it. I mean, you wouldn't want to get your foot caught under there. You'd find out how hard it is to stop the thing once it really gets going. You know, and this is the way with inflation. Inflation gains momentum. You have to basically crush the economy to get rid of it. Now, back during the Paul Volcker era, they were able to quell inflation. But it wasn't as bad as it is this time. You know, I think I know part of the reason why they're being so stubborn on this is they realize the damage that inflation can do. You know. But at the same time, do they realize the damage deflation can do and how suddenly it can set in? And it can lock the system down. Lock the system down so that it disables us. It disables the entire Western world, the entire Western hemisphere. Meanwhile, we got the East over there, and they're just rubbing their hands together, looking over at us and saying, when's this going to happen? Come on, Fed. They're cheering the Fed on. Come on, Fed. Cut more. Raise interest. Make the interest rates go up more. Come on. Go, go, go. They're over there cheering. It's like a cheerleading team, probably. You know? You know? I mean, they're just eyeing what's happening over here in the West. Like they're just like sitting over there rubbing their hands together and saying, can't wait. Honestly. Okay, let's take a look at gold now. Gold, it's down $11.20. Let's take a look at cryptocurrencies. What we're looking at Bitcoin price is... Oh, here's what I was going to say about gold and silver. I got a little bit sidetracked. You know, I'm a little bit enthusiastic about telling you guys about what's going on out there right now. So I got a little bit sidetracked on what I wanted to say about gold and silver. In the initial phases of this crisis, when at a certain point, like when the markets are collapsing, we start to get markets collapsing, which we're on the verge of right now. And the initial starts of that, you know, there's margin calls go out and people are sell, and they're just going crazy. And they're selling everything, including their gold and silver and their bitcoins or whatever they got, they're selling, right? But at a certain point, after the market drops a ways from where it is now, and it hasn't really, we've never seen any real crash yet. We're in correction territory. That's all we're in right yet. But when we start to see the real crash, when they get frightened, they're going to run to safe haven assets, including gold and silver. And they're going to want the real physical. If you're counting on gold and silver dropping all the way through this crash that we're having, don't count on that. It might change direction, start at a certain point in the crash when they get frightened. Investors get frightened, then they run for safe haven. They don't think about, at a certain point, they stop their mentality. See, they have a mentality. Money managers and all these people out there that are managing money and everything, they have a certain mentality that they want to make. They want to make profits. They want their money to work for them. But at a certain point, when they get really scared, then they start thinking about, instead of thinking Keynesian, they start thinking about Austrian school economics, where you want to just hold what you got. In other words, you don't want to see your fortune go out the window any longer. You want to go safe haven at a certain point, And, of course, it's going to become obvious to them at a certain point that, yeah, the Fed is going to change their tune on all of this at a certain point in time. And it's all about timing. See, so in the timing of all this, there's going to be a transition period where the investors out there say, hey, you know what? I'm not going to hoard the dollars anymore because we're getting close to the Fed turning. And I want to retain my value. And they're going to head into these asset classes like gold, silver. At a certain point, it's all about the timing of all this. They're watching the Fed just like I am. And they know that the Fed's going to make this transition. Big question mark is when. How far is the Fed going to let the markets fall? Now, I've been saying 25, 26,000, but I don't know for sure. I mean, they could stop this thing anytime they really want. See, it's all about the timing. All has to do with everything got to do with the Fed and what the Fed's doing. And when the Fed makes this transition. And they're going to be very hesitant about making this transition because they know as soon as they make this transition is the dollar's demise. They're going to send us on the road to hyperinflation. As soon as the Fed relents and they pivot. Okay? So anyway, we're going to move on here and we're going to talk about Bitcoin price is 19,071 today and 1,358 for Ethereum. Now, for you investors in cryptocurrencies, you're watching it dribble away on you. And you're like, hey, you know what? Maybe I should sell this puppy. But I'm going to tell you guys what. There is going to be a turning point for this too. But this could lose more than the gold and silver. The gold and silver is a better bet, in my estimation, Yahoo Finance today, we're going to take a look at the Dow Jones. Which is off 335 points on the day at 30,683. Okay, we seen that last big drop. Okay, let's see. Where are we right here? Okay, right here. We're looking at this drop right here down to 19,173. At the beginning of the pandemic. And then we saw the massive stimulus come in. And some people bought at 19,173. And it rose the market all the way up to, because you remember the stimulus was absolutely amazing at the beginning of this pandemic. And so we rose it all the way up to 36,338 or even higher, around in that area, right? Now what we've done is we've seen a drop down to just over 30,000. Take a closer look at this, and she's on her way down again. And I'm not thinking that they're going to let it drop. Well, anyway, I've said to you guys, and I've made it clear, a 40% drop in this market will see a credit freeze or thereabouts, a crisis like we had in 2008 in the system, a 40% drop. So what is a 40% drop? It's roughly 21,700, rough around that area, or 21,500. So that's right in where I got the crosshairs, right in here, right in this area right here. You know, so we got a long way to go before we get down to that point, where we'd have a credit freeze. That's where I've said if we drop below that, then we're really in danger of having something very, very dire happen within the financial system. But I'm thinking they're going to turn around probably somewhere in around this area here, that they're going to do their pivot. If you can buy the market when the sell-off, probably, I'm thinking, but I'm not, I shouldn't say it, but I'm thinking it's going to do the same thing all over again that it did at the beginning of the COVID pandemic, when it dropped from 29,000 all the way down to 20,000. Basically it shed 10,000 points. And then we saw what happened when people that bought at that bottom and rode that puppy all the way up to 36,000. Well, we're basically wash, rinse, and repeat. So probably around here someplace, and then people that buy in, they're going to see the market go way up here higher, probably 40,000 or higher, because we're heading into a hyperinflation, and the best performing markets in the world are markets that perform at the expense of the currency. In other words, but you're really not making anything. Again, you're not making anything, because what you're seeing is the value of what you can purchase with the dollars that are stored in the market went down to the point where it equals where the market went up. So it's a crazy world out there right now. Let's take a look at oil. 83.58. It's down $2.15 today. Move index 133.79. Bonds and rates today, and here we're seeing a lot of movement in the bond yields. Look at that 10-year, it's over 3.59, almost 3.6%, and it's up 10 basis points today alone. And the U.S. 30-year is 10 basis points up at 3.6. And look, it's still, the inversion is so strong. We're looking at over 4%, 4.06 on the U.S. 1 year. Imagine that. What a strong inversion that is in the yield curve. Okay. Take a look at the dollar index today at 109.99. It was up over 110 today. So the dollar's strong. But listen, guys, don't be fooled by all of this. You might see extra strength come into the dollar yet before the Fed pivot. But you don't know when the Fed pivot's going to actually occur. And they've told you all along they're data dependent. And when the going really gets rough, you watch the Fed turncoat. You watch. They're not going to hang in there and watch the entire system collapse. In fact, they're creating this crisis so that they can fix this crisis. And what does that mean? That means they get to bail out all their buddies all over again and give fresh new money to everybody that matters to them. You don't matter to them. So if you're thinking about you're going to get money, well, you might get money and when they do fiscal stimulus, but they're only going to do that again when the economy's totally crushed, and they have to, and that's going to come at the expense of the dollar as well. Everything is paid for by the taxpayer, ultimately, in the end. And what they're doing is they're making everybody poorer and poorer. And in the end, none of us, unless you're ultra rich, there's going to be two classes of people, ultra poor and ultra rich. They're taking out everybody in the middle. Catch you guys in the next show, and you guys have a great day. Bye-bye.